Crypto markets have been a little unusual this week. While Wall Street posted its biggest loss of the year on Tuesday and worries about further rate hikes from the Federal Reserve continue, crypto prices have remained weirdly steady. According to data from CoinMarketCap, Bitcoin is sitting basically where it was a week ago. As of 11 a.m. Friday morning in Hong Kong, Bitcoin was sitting at around 24,000 US dollars. Ethereum had a similar sort of trend, also sitting basically where it was 7 days ago, worth about 1,650 US dollars. XRP basically unchanged too, though smaller capitalized tokens, things like Cardano and Polygon, both ebbed a little over the last 7 days.
I think the markets this week have been broadly flat, looking at the major coins that people know, and I think you're not seeing much of a variance. You're seeing maybe down a couple of percent or up a couple of cent, not massive swings. I think there's it's been a calming week.
Now, analysts say that macroeconomic events continue to be the main driver of crypto prices, but the similarities between stocks and crypto seem to be waning. On Twitter, UTXO Management senior analyst Dylan Leclerc highlighted that correlation between stocks and Bitcoin, which was at its lowest since late 2021. They still remain positively linked, however. Casper van der Leuk, the chief executive officer of quantitative trading firm Musker Capital, told Forkast that stemmed from investors looking for fiat alternatives. He said, quote, "People are fleeing to Bitcoin as trust in fiat currencies and traditional systems are dropping. Banks in Lebanon are being put on fire because of limits on cash withdrawals. The value of currencies has dropped a lot and people are looking for alternatives." Now, Bitcoin specifically remains high on investors' lists ahead of the next halving in March 2024.
When it comes to Bitcoin, I think we always have to look kind of for the long term, but also historically, and think that and realize that Bitcoin's kind of correlation, or at least its kind of responsiveness to the macro, is something that wasn't from day one, right? That's something that's kind of evolved over time as the asset is maturing.
But overall valuations in the crypto market remain a little peculiar. Fluctuations in the global economy are prompting reasons to both buy and sell crypto in different parts of the world. Inflation, of course, has hit purchasing power everywhere, and the cost of energy has also recently started to come down. And it's that last point that may likely be providing a bit of a buoy to prices.
It's a very multi-speed environment. The UK economy is reasonably slow. The EU is reasonably slow. It's booming in Australia. The US economy is doing pretty well. So there's pockets of really good growth, and there's pockets of really, really slow.
Now, next week brings further uncertainty from the Fed yet again, though another increase in interest rates is widely expected. Bitcoin has been range-bound of late, failing to breach the $25,000 mark, and that has led some to predict that a drop is likely to come soon.
Plenty of volatility ahead, but generally I would still see this is a good time, accumulate, and in the coming bull run, I think the halvening is important, and it's always been important.
Alright, that's it from us for this episode. Do like and subscribe to this video if you want to have a markets update every week. Please let us know your thoughts on what's happening in crypto markets as well, down below in the comments or wherever you're watching this video.